It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, May the 10th, 2016. Another exciting newsletter for you tonight. We got crude, S&P, gold, and of course the euro on the schedule for this evening. Crude oil and the S&P 500 are trading inside quite strong bull wedges this evening, while gold and euro are trading inside of ranges. Megaphones on the gold and euro ahead of Wednesday's trading session. Got a really interesting set of charts for you guys and gals tonight. Before we jump into charts and check the schedule and put together the strategy for tomorrow, though, I do want to remind you the only place to watch the full-length version of our nightly newsletter is here on our trading blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, make sure you follow that link in the YouTube video description, and that'll take you over here to our trading blog at sidewaysmarkets.com, where you can watch the full-length version. While you're here enjoying the full-length version covering all four markets, don't forget to grab your free pass to attend our trade room as a guest anytime this week or next. Grab that free pass in the upper left-hand corner. In the lower left-hand corner, don't forget to register as a member of our newsletter mailing list. I'll send you an email every evening between 7:15 and 7:30 Eastern Time when that nightly newsletter is ready to be watched. Right below the video tonight, you can download all the charts you see me using in tonight's video. Don't forget to download those charts on our blog right below the video. And over on the right-hand side, I'll encourage you to join us as a trial member here at School of Trade so you can learn more about what it means to be a student. If you have any questions along the way, we always have someone standing by 24/7, 365 to cover all your questions. So don't be a stranger, right? Contact the office using our live support button on the right-hand side. Hope you guys are having a great week so far. Second week of the month of May. Boy, oh boy, it's been a busy week here so far. Tomorrow is Wednesday, May 11th. We have a pretty empty calendar for tomorrow. Well, I guess not that empty. You know, we do have inventories. We do have the old Treasury budget tomorrow. That's probably why a little bit of these markets are range bound here this evening. Nothing this evening. Nothing really to worry about this evening. We had a little bit of news coming out of Australia, but nothing too important tomorrow or in the Asian session overnight, although we do have Wednesday, May 11th. Big news tomorrow is the petroleum status report. We'll be sitting on hands 15 minutes before that news event tomorrow. We get some minor news coming out of Great Britain industrial production tomorrow morning. I don't think that's going to be too much of a market mover. 10:30 with the petroleum status report, the inventory report tomorrow morning. We'll be watching that tomorrow with our students. And then, of course, tomorrow afternoon, if you do trade the afternoon session, right, the Treasury budget at 2 p.m. Eastern Time. In my world here at School of Trade, the big news tomorrow will be that petroleum status report. We will have to be careful on Wednesdays. We know that Wednesdays are that kind of bump in the road for crude traders. We have a market that is usually a little bit lower volume ahead of the news, and then it tends to be really violent after the news comes out. My rule of thumb on Wednesdays is get in early, get out early, make your money before 10 a.m. if you can, and then watch as that volume slows down between 10 o'clock and 10:30. I have a dead cutoff, right? I have a cutoff at 10:15 a.m. on Wednesdays, so no touchy, right? The crude oil on Wednesdays after 10:15, and then I'll give it at least 10 minutes after the news comes out. After 10:40, I can then start to trade afterwards. I'll be honest though, really after 10:15, it's usually pretty much gambling on crude oil futures on Wednesdays. So this is that day during the week tomorrow where crude traders have to kind of sit back and relax a little bit. Again, get in early. Everything from 7 a.m. until 10 a.m. tomorrow will be the sweet spot. And then, of course, if you do want to play a little bit more aggressive after 10:40 a.m. tomorrow morning, you'll have a chance after the inventories come out. The one thing I always remind my clients and my students in the trade room every day is you don't need to push it after that news comes out. If it's going too fast, sit back, relax, and wait until the market slows down. It'll usually go into lunch and then give you some decent movement after the lunchtime session ends. We'll be talking about that live tomorrow morning in our trade room. It opens up at 8 o'clock Eastern Time. Come out and join us. And, of course, we look forward to having you there with us tomorrow morning. Now, speaking of crude oil is bullish with a wedge this evening, which tells the buyers to look for traps below prior swings for the most reliable trading opportunities tomorrow. The bull wedge tells us there is a target up at 45.05 where the wedge trend lines come together, right? We have already tested the measured move resistance, which tells us there is likely to be another attempt back to the highs, and buyers will be waiting patiently to see where the price goes next. If we pull back to prior support levels, that's the ideal scenario. If we pull back to some prior support levels, the buyers will be drooling over seller failures, but if the price pushes higher, we need to be careful buying into that overhead resistance until we can get that breakout pullback and get above the measured move resistance, turn it into support, and go up for that wedge target overhead. As we talked about before, the big variable is the inventory report tomorrow. So what I'm going to talk about tonight really may only apply until about 10:15 tomorrow, and then of course all hell breaks loose when the inventory report comes out tomorrow. So on our best behavior, again, like I said, the window is between 7 a.m. and 10 a.m. tomorrow morning. After 10:15, that's my drop dead, and then of course after 10:40, then we'll see how the market looks after the fact, and we'll see if we want to do anything with it. My goal on Wednesdays is always to make my money before that 10 a.m. Bell rings. Now, as you can see here, first things first, we have a handful of important clues on the chart tonight. We got a bull wedge. This bull wedge could be drawn a few different ways. If you're a student of mine here at School of Trade, you might be shaking your head right now going, really? That's the way you're going to draw it? It's the best fit that I can find. These markets have been pretty choppy over the past few weeks. So again, it is what it is. I think the high is exactly correct. The low could probably draw in a few different ways, but in my opinion, it gives you pretty much the same story. As we always say, we're trying to trade situations, right? We're trading situations. We're not trading signals. We don't trade setups. We trade situations. We find the context of the market, right? The trend, the setups we're looking for, wait for the proper entry triggers. This bull wedge, really two things when you think of a bull wedge. The first thing is traps, right? Traps. There is a big bullseye on that 43.82 right now. If the buyers can get in around that 43.82, they'll be loving life. We'll see if it pulls back that far. The first thing you want to remember about a wedge, stick to the direction of the wedge until we get to the wedge finishing point and look for traps. Look for traps. Traps always occur at prior areas of support. So you can see where we have two very obvious prior swing lows. What we're looking for here is, if you listen to my newsletter, you know how this goes. We're looking for price to make that push below support and then a failure, which turns into strength. A strength that turns into a pullback, and of course a pullback that goes back up to the high. Where's that going to happen? It may happen at 44.26. It may not happen until we get a little bit lower down here to that 43.82. Heck, it might even happen a little bit lower than that level, right? I don't expect it to be as strong if we make it all the way back to 43.17. I would imagine this area right here is really going to be our ultimate line in the sand for where those sellers can then start to sink their teeth into trying to get that run back to that low. Right? Does that make sense? So bull, right? Bull wedge tells us focus on the buy side. Again, I would say until you get and stay below that 43.70 area, right? For you sellers out there, you really got to be careful because the buyers are going to be scaling into this thing as it pulls back, trying to get into a position before that news comes out tomorrow. The second big piece you want to remember about a wedge is that you have that target up top, right? At 45.05. Now, that is a significant target. It's also a significant area of resistance. Anytime this goes for measured moves or really any area of resistance, if you have an area of resistance overhead, we make a run up to it, we can typically expect to see a two-legged correction and then a revisit back at that high. This is one of the examples that I talk about when we talk about double top reversals. This is that double top reversal. This could be a wedge resistance. It could be a range high. It could be a trend line. It could be really anything, a measured move, any area of resistance. The reality is that when the market is really bullish and moving higher like this, a level of resistance is usually not going to cause the market to react. But the buyers aren't going to be interested up at the high. So what are they going to do? They're going to wait for a trap. They're going to wait for the first pullback to fail, and they're going to look to get in somewhere below that pullback. That's why a two-legged correction is always expected. And then obviously at that point, as those buyers scale into this sucker as it pulls back, right, the stop losses that are sitting up here are just sitting ducks, right? Because you know there are stops sitting up there because a lot of traders, I know I'm guilty as charged too. When I was a new trader, I used to think that just because it was resistance, you could get away with selling it. I know, calling reversals is a big rookie mistake. We all made it. Luckily, though, now we know better. But there is always a new trader out there, thousands of new traders out there that insist on trying to sell into a bullish market. And so, of course, their stops are just sitting up there like candy, right? Just waiting to get plucked off up at that high. And that's what the buyers are looking to do, right? That's what they're looking to do. Once we get through that high, then it's a breakout pullback to see if we can stay, or a breakdown pullback to see if we reverse from there. But that's the most important information I can tell you, though, about any of these areas, right? The measured move overhead, the double up, the wedge, all of that is resistance. And so let's assume we use the wedge, right? Up to the wedge, buyers take their profit for good reason. You'll have sellers, counter trend sellers, right? Those sitting ducks that will try to sell this sucker, and they might get a little bit out of it, right? Two-legged correction back down and then right back up, right, for that double top. Then once we get there, where do we go from there? Do we break out, pull back, and hold? Good. If we do, we can keep buying. Or do we break down, hold below the resistance, and we get a full-blown reversal? It all depends on what's going to happen when we get that double top, when we get that revisit back to the high. The measured move is also a really important topic here because you can see that has already been tested. And so now that you know how we treat resistance in a bullish market, this is, by the way, a triple measured move, right? It's A, B, C, D, then tripled up. If you need more information on how to draw that, come see me tomorrow morning, the trade, and I'll show you guys how we draw it correctly. The triple measured move, though, at 44.78 has been tested already. This is where we're looking for that two-legged correction, and then back up we go. That may also give all those buyers a beautiful opportunity here for a trap low and then right back up. It's going to be a little bit difficult if it just runs higher. Right? If it just runs higher, then we have to wait. Do we break out, pull back, and hold up to the wedge? Or do we run higher, collapse, hold it as resistance, and then make the move lower? That's the variable right now. Obviously, buyers are looking for a trap low and then back up, a trap low and back up. That's going to be the easy money, right? The more reliable profit out of this market tomorrow. But obviously, if it does break and hold above that measured move, this is going to be the challenging part because there's not much room between the double up and the wedge. So it's really going to be a situation where the buyers are going to have to either pull back or they're going to have to clear all of this and stay above it. We'll have to wait and see what happens tomorrow, and we'll be trading this market live in real time with all of our students here at School of Trade. Let's keep moving. Over to the S&P, which is extremely bullish this evening. Look at this chart, for crying out loud. This narrow wedge gives the buyers a big target back at 2090. If you look up a little bit further, you'll see, yeah, that's 2100 all the way back up. And it doesn't take a very good memory to remember where we're coming from here, right? We've recently been up at that, right, up at that 2100. So a little bit of looking back left, and you can definitely see it here, right? So S&P extremely bullish. Look at the size of this wedge, though. This is something interesting. We don't see this very often, right? Now, if you look at a much faster time frame, you know, like a 2,000 tick or a 6,000 volume chart, look at a faster time frame on this, and all of a sudden you immediately see this thing was a narrow son of a gun today. It was a very narrow range here this morning. Tough to tell why it's acting like this right now. I prefer not to even care about why, to be honest with you. You could go to different news channels on television or the internet, and they'll all give you a different reason why they know why the market is acting like this right now. I don't care. It doesn't matter what happened. All that matters is what we got out of it. So we know we have a very simple, right, bull, basically spike and wedge. And look at the target on this thing, right? That's a monster target up there, up around 2090, up around that 2093.62, right? So 29.3 half. 29 3/4, we get a really big target up above that 2090. Now, you know how we trade wedges now. The smart buyers will be waiting for a correction after price completed the measured moves.